Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital, and talking to Mr. Michael Becker today, who's still a prisoner in his own house. Michael, how are you?
It's definitely a little stir crazy. Definitely glad to see that the governor of Texas is starting to open up our great state, and I'm looking forward to the day of going out to eat someplace that's not my house. So that is hopefully in the not too distant future.
Going out to eat is one thing, but getting a haircut probably is the biggest thing for a lot of us.
I have a confession, Paul. I got a bootleg haircut over the weekend. I paid a lady to come sit outside my house and cut mine and my son's hair, and that was the best $100 I've ever spent in my entire life. So hopefully I don't go to jail over that, but I just couldn't take it anymore.
That's pretty good, but I'm sure that your wife, who's like my wife, is itching to get to the hairstylist, the people that are going to put her back together again. So she's definitely looking forward to going and seeing her salon girl lady sometime next week. So good for her, good for you, and I'm glad that we're starting to come out of this deal. So I want to make sure that everybody is reminded, though, that if you want to get some information on multifamily financing, Michael, James, and I put together a multifamily 101 financing white paper report, which I think is a pretty good breakdown about what's going on financing. Again, when we wrote that was at times where there was no coronavirus. So things have changed a little bit, and we put in some additional information about what has changed, just probably hopefully in the short term too. And that's going to be one of the things is additional reserves that are going to be necessary in some different debt coverage ratios and things like that. A little bit more technical stuff that gets in the weeds that you're going to want to know a little bit more about too. So go to the Old Capital Podcast and download that. We would certainly do appreciate that. So in the podcast, we have a friend of ours that we've known, I don't know, for a couple of years, I guess. And I think that he's done very well. And we kind of want to highlight where he started and where he's at today, and especially where he's probably investing too, in what area of the country that he likes and how he does it, and how does he find these properties. And I think he's just going to be an inspiration to some people that maybe are not originally from this country that have come to the United States. And he's going to kind of talk a little bit about how he got kind of the American dream. So in the podcast today, we have Reed Goossens. Reed, thanks for being on the podcast. We certainly do appreciate that.
G'day, gentlemen. How are you?
I'm doing great. Now, you're talking to us from Southern California?
That is correct. Coming to you loud and clear from my office in Hermosa Beach. It's not a bad life down here given coronavirus, but it's just getting out of the house. I know you boys are going stir crazy. I am too, and I need a haircut. $100. Best money I've ever spent.
Best money I ever spent.
Can you get to the beach these days, or is that closed down also?
Still closed down. Been closed down for since early April, I think. And I'm a big avid surfer, so I've been itching to get back in the water. But that is not, I don't think, at least here in LA, I know down in, I think, San Diego and up north in Santa Cruz, they've started to open up beaches as of last weekend. So hopefully we will follow suit very, very soon.
That's great. Michael, I'm going to turn it over to you, and let's start our conversation with Reed.
Yeah, as you guys can probably tell from his accent, he's not from here originally. So Reed, maybe start with a quick little background on yourself, kind of where you're from, how you find yourself to America.
Yeah, look, 30-second elevator pitch. I moved to the United States back in 2012, and the real reason I moved here was to chase two loves. One love was my then girlfriend, now wife, who is American. But the second love was to move to New York City, just to live as an expat, doing a job in New York City. And my background's in structural engineering. I worked across the globe, graduated in 2007, went to London, worked in London 2012 Olympic Games back in 2008. So I've got a lot of experience in ground-up construction. Moved to the United States without a job, found a job, got a visa, was able to stay here, and then in 2014 moved back to LA and have been in LA ever since. But the biggest thing for me is that when I first moved to the United States was the low barrier to entry of real estate investing here in the United States. And I guess my whole shtick is that I want to empower people, other Americans, hopefully listen to this, that given my international perspective, it's a little bit of my superpower that I can come to this country and see some of the stuff that maybe the average person doesn't see, because we don't have certain things in Australia compared to what you guys have here. And I'm sure we'll talk a little bit about that. But in the last, so I moved here in 2012. It's now 2012. I got my green card in 2017 when I finally married my long-term girlfriend. And in that period of time, I've amassed in my portfolio 1,900 units at Wildhorn Capital. We've currently got about $250 million under management today. I've achieved financial freedom along the process. I work for myself, and I've escaped the rat race. So all the things that I wanted to do in a pipe dream back in 2012, but they've actually come to reality, which is pretty freaking incredible. And yeah, we can talk a lot about that and more, and what makes me tick. So yeah.
Well, cool. Well, let's maybe start just kind of a little bit about kind of what you've done professionally here in the multifamily space. So you are a principal at Wildhorn Capital, and you're based in LA, and your partner is based in Austin. So maybe talk a little bit about that and why did you get into real estate, or how did you get into real estate here in America, and kind of how the hell did you get to Texas?
So the whole bug of real estate really started back in 2009 when I picked up the book Rich Dad Poor Dad. Just more of a knowing that I didn't want to work for the next 40 years of my life in a cubicle. I wanted to be my own boss. And so fast forward a couple of years, I was doing some self-education in Australia, was going to do flipping houses or just something. I knew I needed to get my money working for me, but I also really wanted to live abroad again, back in New York City, back to my second love. And when I moved to New York, within I think 2 weeks of being fresh off the boat, I was at my first New York RIA, Real Estate Investment Association. And for those people who don't realize what you guys have got here in terms of the incredible, I'll call it tapestry of learning opportunities, both from podcasting to live events to the RIA associations, it is, it's like taking information out of a fire hose. And so when I moved here, I was really blown away just by how much incredible information there was. So started learning about the American way of investing, but also quickly realizing the low barriers to entry that, you could buy properties back in 2012 and, in a market that I could drive to from New York City for less than $50,000. And as a fresh-faced Australian, I quickly realized what the hood was and what Section 8 housing was. So, but in saying that, I also, being fresh off the boat, I didn't know what a credit score was. I didn't know what an EIN number was. I didn't know what an LLC was. And so I had to learn all of that. And at that point, I had been sort of self-educating for a couple of years now, and I just got to the point where I was like, I need to go take action. I can't sit on the sidelines and keep reading books about real estate investing. I had to go give it a go. So I bought my first property in 2012 it was a triplex for $38,000 in upstate New York in Syracuse. And, that was sort of the start of the journey, and then morphed into, wanting to do more and be more and quit my job eventually, and made the transition in 2014 to LA and started looking just at deals in Texas. And I quickly realized that I had this skill set being from the sort of the institutional world of ground up construction and underwriting and construction management and asset management, that I had a lot to give, but I didn't have that missing piece, which was boots on the ground in a more of a moderate, more affordable market like the Central Texas markets. And that's really where I partnered up with Andrew Campbell, my partner at Wildhorn Capital. And I know, Michael, on the show you just did with me on my podcast, you spoke about the complementary skill sets. And the most important thing I can sort of tell people when you want to get into larger commercial real estate is you need a partner or partners who can be complementary to the skill sets that you have in order to go and divide and conquer. And so Andrew was boots on the ground in Austin. We were hunting deals in San Antonio because they're a little bit more affordable compared to Austin. And I had sort of the background of the asset management and I'm detailed orientated. I'm also have some experience in supply chain. So there was a lot of things that I brought to the table that I just couldn't do being based in LA. Also had this weird accent every time I opened my bloody mouth. So trying to get broker relationships was probably that missing piece. And that's where Andrew came in and we were very much my yin to his yang. And we've gone off to, on to buy now 1,900 units. We just closed on a recent deal just before the massive Corona tide or wave, I should say, hit now on early March 12th. But now we're right in the thick of it like the rest of you and trying to navigate these uncharted waters, I should say. So yeah.
Before we kind of talk about kind of current state of the market, you said that is that really something that you found, that being a foreigner in this land with a funny accent, is that really an impediment for you to try to bring some credibility out of the gate with a lot of these real estate brokers?
Yeah, look, I was getting into best and finals on very, less than 75 unit deals. I was clear I was underwriting correctly, but I just missed that. Like I remember back in 2014 missing out on like a 50 unit deal in Dallas because I just didn't have went to I don't want to name any names on here, but they went to people that we all know that they're students of those. And I just couldn't compete because I wasn't in that market. So how did I had to ask myself, well, how am I going to compete? Well, I need someone who's boots on the ground. So, you asked before, why Central Texas? Well, just because of the moderate cap rates compared to the coastal cities, and I could have a bit of cash flow, which would help supplement my income, which meant I could get to leaving my day job sooner. So that was really all it was, and why I started. But back to your original question of broker credibility, just that was probably my own perception that my accent was a hindrance. But through evidence of getting to best and finals and just missing out on deals by 30, 40, $50,000 meant that I just didn't have that right relationship just yet to win deals. So yeah.
That's a real thing. Life is completely unfair, and a lot of it's what chips you can trade, and little edges make all the difference when it comes down to a deal. And I'm sure missing a multiple $1 million deal by $30,000 would be extremely crushing if it happens to you repeatedly, right?
Right.
But kudos to you for recognizing that and putting something in place like a partnership and someone local to kind of overcome your shortcoming to get deals done. So that's great. I think it's such a great takeaway as we kind of come into the new world here in a few months, and when deals start going again. I think that's certainly something that people that are aspiring to get in this business need to be just real with themselves and what they have and what they don't have, and try to find ways to overcome your shortcomings. So good for you. Kind of transitioning a little bit to kind of current state of the market. Here we are at the end of April as we record this, April 29th, and the world's completely different than when you put that deal. The last deal you bought, you probably put in escrow in December or early January, and then the world was completely different then, what you thought it'd be today than what reality turned into. How are you guys weathering so far? A month and a half into this, what have you kind of observed? What's reality versus kind of what you expected when the stuff started hitting the fan?
Yeah, so just a couple of things were some very crucial pieces of advice, and this is probably for everyone out there who is looking to get into the multifamily space or starting to underwrite deals or whatever that might be, is back in the day, I had a mentor who helped me, or a person who was I looked up to for advice from an underwriting point of view, to over-raise CapEx dollars and an operating account. One, you will reduce the IRR by doing that, but you have more cash on hand if things were hit the fan like we're currently sitting in right now. And I say that because we've been doing that for many, many years, just purely by the chance that I happened to come across a gentleman who taught me that way of underwriting. So, for those people out there listening, we're now in a state where the lenders will require you to do that. But if you haven't already done that in the past, you might be hurting a little bit more than say some other folks. So given that background and that bit of insight, we're actually doing a lot better than what we thought. We all thought, I think, the doom and gloom of April was going to hit, and collections across most of our assets are above 96%. There's one asset that's a little bit lower, but overall, I think we only have out of 1,900 units, maybe less than 2% or 1.5% of residents who will be carrying over some sort of existing balance to May, but we have a payment plan in place. So that's really great to know. But I also know that the longer we're in our houses, the longer this is going to hurt, because we do buy assets in transitioning neighborhoods, not saying that they're in the ghetto, but they're, median household income would probably be in the $40,000 to $50,000 to $60,000 range. So when you don't work and you're paycheck to paycheck, it's going to hurt. You want to keep food on the table first, and the next bill you pay is probably healthcare, and the third bill will probably be rent. So, we're trying to make sure that we're accommodating all our renters and understanding the demographic across all our portfolio and who's most susceptible, which will probably be the server industry or the construction industry. So really understanding that from a granular level on site, documenting people who've reached out and are going to put their hand up and said they're going to have an issue, implementing payment plans, and just really monitoring that as we move forward into May collections, which I think will be worse. But in saying that, it's good to hear that the Texas governor has started to loosen the restrictions, which is all going to bring some consumer confidence back, seeing that there's a quote unquote a light at the end of the tunnel. But time will only tell in terms of how May goes and how June goes and how the rest of the year will phase out for us.
So you, I think you, generally speaking, have a relatively simple setup to us with the way you raise capital, which is usually in the syndicated format. So you're raising, money probably 100,000 at a time from, various people that you've known professionally over the last, 7-8 years in America here. What's the sentiment that you're kind of getting within your investor ranks? Are there a bunch of anxiety right now? What are some of the communication that you're pushing out to them, and what are some of the feedback that you're getting from the investor pool?
Yeah, look, so the first thing is in our mind is get in front of it. So back when this sort of came middle of March, when it was all coming to the fore, we usually only send out monthly updates, but we then sent out 2 end of the month updates for March, telling investors what we're doing on a property level for the health and safety of tenants and staff. And then we sent out a second communication of this is how we're going to document the issues moving forward for anyone who has issues. And then coming into April, we then communicated these are the tenants that we have. And that sort of coincided with the quarterly update as well. So we were able to give the quarterly update for Q1, but also then give a summary of where we're at from a collections point of view and exactly how many people have put their hand up saying they've got an issue, are going to go into payment plans, where we're collected as of, I think our quarterly distributions come out, our quarterly updates come out the 11th of the month. So, what's the line of sight to the finish line? And so being over more data, the better. And the feedback we've got is, we're really glad we're invested with you because we appreciate the transparency rather than being not transparent and not getting in front of it. So we haven't had any negative feedback. We have paused distributions for the time being. We've stopped all capital expenditure that wasn't already in place or, finishing out some maybe unit turns. So really overall, most investors have been very receptive to what we're doing because a lot of our investors have been investing in syndications and probably, whether they're in your syndications or our syndications or other people's syndications, they're seeing other operators do the same thing, which is, batten down the hatches and prepare for the worst and hope for the best. So, yeah.
Got it. One of the topics I know that Paul deals with all the time is, something you probably uniquely qualified to talk to, and that's just kind of being a foreigner in America and borrowing money and overcoming some of the obstacles. So maybe I'll kick it over to Paul to kind of maybe talk a little bit about how do you get financed when you don't have a social security number, you're not from America, so Paul?
Well, that's exactly correct, Michael. I was just going through our database and looking at a lot of the people that subscribe to the Old Capital podcast. And I have to tell you that a lot of the names I would have difficulties trying to say just because they were either born in Taiwan, China, India, someplace else, and now they live here in the United States. And one of the things that comes up all the time is, I want to buy real estate and I want to take advantage of the American dream, so to speak, but how do I do it? And so I think Reed would probably be a good person to kind of ask is, Reed, how did you do it and what do you suggest?
Yeah, so part of what I've always done is my podcast was to educate international folks originally back in the day and to have pivoted and rebranded. But the benefits of investing here and through that is also going through the rigmarole of getting qualified. And so what does that mean? I advise foreign investors on how to get set up here in the United States first and foremost. It's pretty simple, but it also takes time. It takes a little bit of money. So if you are a true foreign investor listening to this podcast and you don't reside in the United States and you don't have an EIN or a social security, there's sort of 4 steps and we'll go through the 4 steps. So the first step is getting an LLC set up. And I connect people with good CPAs and attorneys here that help foreign investors who only specialize in non-resident tax advice and non-resident legal advice for the United States. So you can set up an LLC here or an entity here, which you can be a sole member of as an international person. Once you have that the LLC set up, you can then apply for an EIN number. Once you have identified any particular properties that you want to invest in or any particular assets you want to buy. And then the third thing is making sure that you have the bank account. And the bank account is probably the hardest thing to get set up if you're from abroad or if you live abroad, I should say. Because the United States, many years ago, you could do online banking, but these days you have to have a physical presence in the country, meaning that you have to rock up to a bank and open a bank account in person. Unless you're a high net worth individual where there are some sort of bigger banks out there like HSBC that will open bank accounts, but you've got to be worth a significant amount of money for that to occur. So the majority of folks fall into I need to be present in the United States. So a lot of the people that I advise on, I said, hey, when you next coming to the US for a holiday, can you come here, or do you have a family member here that can sign on your behalf? So opening up the bank account is really quite important, and one of probably the most challenging steps. And then the fourth thing is foreign currency, which is then exchanging your money into that bank account to then fund the deal. And then in terms of a financing side, yes, there will be, like anything, you have to prove your credit worthiness. And if you are from a foreign country or you have pay stubs from a foreign country, it's going to be a little bit more of an uphill battle. It doesn't necessarily mean it's impossible. There's a couple of ways in which you can do it. First and foremost is you can partner with other people. And when I first moved to the United States, this is what I did. We spoke a little bit earlier before we press record here about green cards and visas and all that sort of stuff. And I remember when I qualified for my first large multifamily deal, there were some question marks over my status in the United States. And so I had to prove that before the particular lender, which happened to be Freddie, got comfortable with me lending to me as part of a bigger GP. I had three other members in the GP that are all American. So ultimately we got the deal funded and there's no real issue. What they essentially did was actually ping me with a slightly higher interest rate, which was kind of annoying until I got the green card. But there's other ways of doing it. You can get hard money on smaller deals. You can build relationships with local banks. You can buy a property if you're buying smaller properties, or cash, which is what I did to start with, and then build up a line of credit to then refinance some of that money out. There's so many different ways. You've just got to know and have the mindset that there is a way to do it. You just got to go and figure it out, and don't necessarily take no for an answer, because I've been able to do it and do it successfully. For anyone who's listening to this podcast who is a foreign investor, there is a way. Where there's a will, there's a way. So hopefully that is some little bits of advice that you can all use to go off and be successful when you do start investing here in the United States.
And you didn't start off buying a 200-unit apartment building. You started something a little bit smaller and kind of worked your way up.
Correct. Yes. So I bought a $38,000 triplex in upstate New York because I could get on the Greyhound bus from New York City, which was where I was living, and I could drive there in 4 hours and I could be back in one day. And it was affordable, and I could use my own cash. And essentially I was taking a bet on myself to get that first deal done and, experience the US quote unquote real estate market. And, got that first deal done, developed a relationship with a local bank called First Niagara, which I don't think is around anymore. Developed a relationship with a local bank manager, showed over a period of 6 months that I was able to deposit rental checks, and then was able to apply for a line of credit, which then was able to let me buy deal number 2. And then from that, I was able to go and continue building credit over a period of 2 years, which helped me buy a few fix and flip houses in Philadelphia. And that was sort of the start of building credit in this country. And over those 2 years, I was able to build decent credit, and now I'm treated like anyone else. So yeah.
I'm glad you're treated like everybody else. You live down in Hermosa Beach, and that is California. But when you invest in areas like Austin, that would kind of remind you of California. Is that right?
Yeah. Look, the overall thing, I come from a country where we have, overall, so first and foremost, and I speak a lot about this, I spoke recently on stage at the Best Ever conference about this. In Australia, we don't actually have multifamily as an asset class. You can't go and buy a 250-unit garden-style apartment. And the reason you can't is because of it's not a slight at Australia, but it's just the fact of the low population. Our financing arms, we only have sort of 4 or 5 major banks, and thus they do a build to sell model, which is condominiums. They don't do a build to rent, which is what we have here in the United States. Plus, the United States also we don't even have 1/10 of the population in Australia compared to the United States. We only have 24 million people, where I think you have 300 million people here. The other thing is in Australia, where land mass wise, we're approximately the same land mass as mainland America, excluding Alaska, but we can only inhabit about 20% of our land because the rest is just desert. So you're very confined to a lot of major coastal markets, or the only coastal markets in Australia. And there's a supply and demand issue like we see in coastal markets here in the United States, but also what you see in places like Austin, Texas, which has transitioned into what I would call a tier 1 market. So overall, the supply and demand coming from a country where high demand and low supply drops cap rates, or drops, you have more of an appreciation market. the similar things I see in Austin, Texas, where you have a high demand and low supply. And when you have that, or a high barrier to entry for new product, meaning it takes a couple of years to get approved, it takes a couple of years for new construction, buying existing assets in and around those areas means that over the long term, you are going to do just fine. And back to the mindset of making money, and I know you guys have had probably experienced firsthand and seen a lot of people make a ton of money in a very short period of time since the last recession in states like Texas. However, historically, real estate is a long-term play. And thus, I think since 2008, we've seen a lot of frothy, big returns in doubling, tripling money in 3 to 5 years. Well, where I come from, like if you just double your money in 10 years, you're doing pretty freaking well. And so when you have that lower, not necessarily lower, but more of a long-term mindset when you're going to invest in real estate, I believe for the long term, so investing in markets like Austin, Texas, which I know over the long term will have a continued high demand with a low supply type of environment, I'm going to do just fine on my assets. And back to the COVID-19 stuff, is that over a period of time, we will just be just fine. And we spoke about a little bit about asset values, given the quantitative easing that's going on right now. I believe in the future, real estate, particularly multifamily, will do just fine, next 3 to 5 years and beyond, because of all those elements that we spoke about, and in which the environment that I grew up and was learning about real estate investing in back in Australia compared to the United States.
And folks folks that are here living in the United States and looking to buy multifamily properties, and let's say they're brand new being that they just were exposed to it 6 months ago, 5 months ago, 3 months ago, and then now they're looking to try to assemble capital. What are just some bullet points or nuggets that maybe you have some advice on to people that are looking to raise capital to buy their first deal in this type of an environment? Or are they buying deals?
So first and foremost, and you guys know this, that the capital markets are illiquid right now. So, there's not going to be a lot of lending going on. And so you have to wait till the lending comes back before you can start looking, because I assume most of the people who are getting started were going to need some sort of leverage. But when you are attracting capital, it's really important to establish yourself as a person that people can trust and like. Ultimately, people will invest in you first and foremost before they invest in the deal. The deal matters, don't get me wrong, but when you're starting out and you don't have a massive track record, they've got to trust you. You've got to make sure that you know what that you're talking about, or at least you have a perception that you know what you're talking about, and you're going to do everything in your power to make sure that the first deal that you do works. I would not recommend going out and raising capital if you've never done a deal ever. I would definitely recommend getting a few smaller deals under your belt, and that might be starting with a duplex or a triplex like I did, to build that confidence, to build that permission in your mind to go out and say, I can do this and I can do bigger stuff. So ultimately, you need to start with a few small runs on the board. You need to start developing yourself as a credible person in your sphere. You don't have to be the next Tony Robbins, but someone, talk to your friends and your family about what you're doing, and start there and make sure that they're changing their mindset and their mind perception of who you are as a person, because now you're changing into a real estate investor, to build confidence in them, to ultimately, when you go and present them an investment opportunity, they are wanting to invest with you, and hopefully into the future. So yeah.
So Reed, what do you kind of see going forward here now that the world's kind of in the process of being reset? Are you guys still going to be pretty aggressive as we start to come out of this and you'll start loosening up? Is that still kind of the plans, and any other, maybe kind of as we wrap up, any other words of wisdom you might want to share with the listeners? Yeah,
look, I think big picture, we want to go double the portfolio in the next 3 to 5 years. I think we're definitely going to be an opportunity to do that. We're still looking at as much deals as we can, but definitely the deal flow has completely stopped compared to, say, early Q1. So right now it's just wait and see and ride out the Q2, and hopefully in Q3 things start coming about. I definitely will see, I think from an underwriting perspective, you need to look at how deals, when you are analyzing deals, you're looking at the T3 and what that sort of delinquency was as we come out of this COVID issue, and really sort of price the deal on that, rather than looking at sort of T12s. So I think there's going to be a little bit more conservativeness comes with underwriting and raising more capital and really trying to get a bit more of a quote unquote discount than maybe what deals are trading for in Q4 and Q1 just recently. So that's really what we're focused on right now. We're focused on standard operating procedures within the business, making sure that we have a good foundation of SOPs and good assets within the business from a digital perspective and also from investor relations perspective. And that's really where we're going in the next 6 to 12 months. And I think the storm will pass and we'll get back into a buying. I think NMHC next year will be pretty popular, I could imagine, if we're allowed to go. But besides that, it's just be educated. The first and foremost is use this time that everything's a little bit stagnant, a little bit slow to invest in yourself and become educated for those folks who are just getting started, listening to podcasts and reading a ton of books, and just be prepared for when deals do start to loosen up here in maybe Q3 or Q4. And make sure you invest in yourself. So yeah.
Sounds good. Yeah, that sounds some great information, Reed, on that. And it sounds like you're doing very well during this period of time, communicating with your limited partner, your investors, just in doing it the right way. And that's such an important thing, is being fair to your lender, being fair to your limited partners, and being fair to your tenants, your customers, and having them kind of understand a little bit about what's going on right now, and then being able to maybe move your business to the next level in the next year or two, and really starting to build a larger portfolio. So, I'm happy for you, Reed. You're doing well, and continue to explore not only the American dream, but the Australian dream too, of being a rich landlord and doing things right for your tenants. So, Reed, if anybody wanted to get more information about what you do and how you do it, what's the best way for them to get a hold of you?
Yeah, you can just jump over to my personal website, which is reedgoossens.com. That's ReedGoossens. And if anyone is coming through LA in the future, when flights do resume, you can hit me up. And if you want to go for a beer or coffee, just shoot me an email at info, that's info at reedgoossens.com.
Some great information, Reed. Thanks for putting that out there. We appreciate that. Michael, thanks for being with us. It doesn't seem like you're going to be going anyplace anytime soon, but hopefully maybe the next 2 weeks you'll be back at your office.
One day.
Maybe. Sounds good. So again, Michael Becker, we appreciate that. Reed Goossens, we appreciate you coming on. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.